Good morning, it's Friday, April 7th, and this morning I want to talk about the new budget proposal. Basically, the tax portions of the new budget proposal. So the Biden administration has proposed raising the top individual income tax rate and adding a 25% minimum tax on those with a net worth greater than $100 million. And this proposal also targets the top 1.8% of the American taxpayers. But it's not likely that this is going to pass Congress. But anyhow, that's part of the proposal. So in essence, this proposal seeks to generate the revenue by raising taxes on the wealthiest Americans. And I don't have a problem with that. I'll tell you the problems I have in a little while. But in the meanwhile, the top individual income tax rate would go from 37% to 39% for those making more than $400,000 as a single taxpayer, or $450,000 if you're married and filed jointly. And then there would be an increase in the net investment income tax rate. It would rise to 5% from 3.5%. for those earning more than $400,000 in regular income and capital gains and pass-through business income. So if your combined income was greater than $400,000, you would get an additional tax rate. So they're looking at money that you make outside of your job, capital gains and things like that, And if you're an earner making more than $1 million a year, then your qualified dividends and your long-term capital gains would be treated like ordinary income. And then there would be an added net investment income tax. So if you're a high earner, they're really out to get you. And transfers of property by gift or death would trigger a tax on the appreciated value if it's in excess of some applicable exclusion. Very vague terminology with respect to that. And then, of course, the Roth IRA conversions would be prohibited for high-income taxpayers. And the backdoor Roth contributions, where after-tax traditional IRA's contributions can be rolled into Roth IRA, even above the income limits, those things would be eliminated. And then for taxpayers who with a net worth greater than $100 million, a 25% minimum tax would be imposed on the total income, including unrealized gain. So why am I upset about all of this? I'm upset about all of this because there's a major portion of our society that is being ignored in these tax increases. Where are the corporations? There's nothing in this article that I read that has anything to do with corporations. Corporations get away with murder. They have more tax loopholes than individuals. And I'm not talking about big corporations only. Small businesses get away with murder too. When I was a tax auditor, I found out an awful lot about how small businesses can avoid taxes and everything. I audited a small company that was a father and a son and a mother working, and the only one who was really drawing any kind of salary was the son, because the mother and the father worked there, and all of their living expenses were covered by the business expenses. So he was making 5 times as much as his parents, but they were getting a lot of money on business expenses. And that's true in every corporation right now, in every major thing. They have exceptions. They have subsidy. There's over 150 different business exceptions where they can get a tax break. And there's nothing in this article that mentions corporations at all. Now I know they've just instituted some action against corporations, where corporations would have to pay a minimum of 15% taxes. But that's limited to corporations making in excess of $1 billion. And what about the companies that are only making $900 million? What about them? But that's not enough. That's not enough. They have to pay their fair share. And they have to close these loopholes that exist. And here's a dandy loophole. If a corporation makes tons of money overseas, there's no taxes on that money here until it's brought to the United States. And I can tell you that corporations are smart enough not to bring that money into the United States. So we're not getting any tax relief on the money that these corporations are making outside the country. One of the big tax avoidance schemes of all is depreciation. When a corporation buys some kind of equipment, they are allowed to depreciate the cost of that equipment as a tax deduction, because as the equipment ages, it becomes less reliable, supposedly. Now, how about this scheme? You replace 20 or 30 workers with robots. Now, you buy those robots and they are considered pieces of equipment. So not only have you displaced 20 or 30 employees, you're going to get a depreciation on the amount of money that you spent on these robots. And they're going to work 24 hours a day. These robotic devices don't get time off. They don't go to the bathroom to take a break. They don't go on vacation for 2 weeks. They don't have sick leave. They don't have any benefits like that. Yet corporations are allowed to depreciate them and depreciate other kinds of equipment. And that reduces their tax liability. So here's the bottom line. The corporate tax rate is 21%. But the corporate tax collection rate is only 11%. So, when you look at this, you must realize that the people who deal for corporations and their taxes are smarter than the people that write the tax codes for this country. And the balance is quite unfair with respect to who is paying more percentage towards our well-being, people or the corporation. So that's what I have to say now about these new budget proposal where they don't even mention corporate taxes. And it still irks me. And let's not forget about the salt tax that President Trump capped, which kills us on Long Island and other parts of the Northeast because we are a high state tax area. That's not mentioned in this new tax budget. So I leave you with that this morning. Have a great day. Bye.